Different setting for the video today. Having car issues, that's what happens when you buy a cheap car. But I'm not regretful. Use this car a lot for Uber Eats. It's a tax write-off. It's a beautiful car. I got it at a very good price. Just like I want my stocks. Beautiful stocks at very good prices. And today was a very interesting day in the market, and we saw probably the biggest disparity that I have seen in the last year. And this is a year in which a lot has happened. We saw the Dow close just slightly up. The NASDAQ closed down 2.5%. And there were a lot of stocks in the NASDAQ that were down big. For example, Tesla down about 9%. A lot of other growth stocks down big. Tech across the board was down today. And that, I believe, has a lot to do with interest rates. So people are calculating, all of a sudden, the present value of future cash flows, doing all these sorts of equations, and maybe looking to see, hey, if bond yields are ticking up, maybe I can get something a little better there. That's a consistent return. These tech companies have gotten super expensive. Maybe they're not as good investments, hypothetically. I don't know. That's just a thought. Anyways, I think a lot of these tech stocks are very expensive, but the Dow was up, and the Dow includes a lot of staple-like companies. And we see companies like energy, almost across the board, having a tremendous day today, even with possible Saudi production increases. So there are some downward pressure there. I did trim my Exxon position last week, added to it today. I'm watching that situation very closely. It looks to me like there's a lot of churn going on in the market. And I think this is good, healthy churn that we have tried to be ahead of in this channel, but is seemingly continuing to go. And that's the churn between tech that has won in the COVID situation and value reopening stocks that haven't really been in the light for a significant period of time like tech has. And it looks like that rotation is beginning to happen. At least it was in force today, and it has been in force in particular days at particular times. But now we are hitting significant milestones with the vaccine, with the case count. We are really approaching the get out of COVID era. And the three sectors that I called on right before the turn of the new year to be sectors to focus on and have exposure to, being real estate, energy, and gold. Well, look at the gold miners today, look at the energy companies, and look at the real estate companies. And look at the churn and disparity that's happening. So this is the trend. It's happening. And, I guess I just expect it to continue to happen and for stocks to reprice in that regard. Not saying tech is not an area to look at, but a lot of tech stocks are expensive. I don't think anybody's disputing the Tesla valuation. Maybe it should have been this value when it was the only electric vehicle company back in, June. But now all of a sudden we've seen massive moves out of GM, out of Ford. Lucid Motors is getting a lot of hype. So the novelty of Tesla is no longer there, and things are going to reprice. So we'll see what happens. That's the deal for today. And until next time, peace out.